They have
There you go. They've done 50.
hiked 50 basis points. So there we go. That is the big surprise there. In terms of the split, we had 7-2 to raise bank rate to 5%. The Bank of England says MPC members Tener and Dhingra voted to keep rates at 4.5. The commentary, let's continue with the commentary. Bank of England's second round effects on domestic wages and prices likely to take longer to unwind than they did to emerge. The language is quite hawkish here. MPC continues to monitor closely the impact of significant increases in the bank rate so far. Let us turn to the guidance. They keep the guidance that if there were to be evidence of more persistent pressures, then the Bank of England further tightening in monetary policy would be required. Here you are seeing a bit of a spike in the pound because of that 50 basis points, as Anil and I were talking about earlier. I'll get back to our guest, but the market was pretty much split on whether they go 25 or they go 50. They have opted for a more hawkish approach at this point, going for 50 basis points. The market was leaning on 37 basis points, so significantly more than what the market was priced in, not just yesterday, but versus a couple of days ago. And it does tell you that yesterday's inflation figure was key to the decision that the Bank of England have taken today. Let me just continue with some of the other commentary that the MPC are providing. They have said gilt yields have risen materially, particularly at shorter maturities. These suggest the bank rate path averaging around 5.5% over the next 3 years. So this is just a commentary on how much front-end gilt yields have moved. MPC recognizes it is important to consider housing rental market developments. It is a big concern for people who have mortgages at this point because they're going to be referencing off much higher rates. Greater share of fixed rate mortgages means the full impact of bank rate rises will take some time. And again, this is in reference to a segment that they have always included in the monetary policy report. I would recommend people watching this to go back and read that segment that they published back in May about the housing market and about the fact that a lot more people today are on fixed rate, longer dated mortgages than they were back in the 90s, which is why the transmission mechanism of higher interest rates to the broader economy is going to take a little bit more time. A little bit more commentary before I go back to Neil. They're also saying that the market rate expectations have risen more than for US and Eurozone, reflecting market concerns about persistent inflation more than stronger growth. And I think that is a good place to leave it. Neil, they are justifying why they went for 50 basis points today.
Yes, and there's lots in the statement, isn't there, about second round effects, the persistence of inflation. They really, I think it was that inflation number that came out yesterday that has motivated this decision. A clear message of intent here from the Bank of England. May not necessarily change the terminal rate. It may be that there's only kind of one or perhaps two more hikes to come. But I think getting there quicker, getting there faster makes a difference. And you're right, this was kind of halfway priced in between 50 and 25 today. I think if they had done 25 rather than 50, what we may have risked seeing, and they may have been concerned about, was that the pound would sell off, financial conditions would loosen. Of course, that's the last thing that they would have wanted to have seen, given that inflation number yesterday.